All right, let's take a look at exercise 4-6 starting on page 212 of your book. This one looks more complicated than it really is, so let's kind of go through and read it overall. It's telling us that Esquire Book Company had income before taxes of $1 million, and that's before considering the disposal of a division of the company. It actually disposed of a division that had a tax loss on the disposal of $350,000, and before it had that loss it generated income of $500,000. It's telling us that it had a restructure cost of $80,000. So go ahead and read through that problem, but basically what you need to do is step through this by looking at continuing operations before you worry about the disposal. So let's start with the given information. Income before anything else happened was $1 million. Point number 2 tells us that as part of our disposal, we restructured the company before we did anything, and we had restructuring cost of $80,000. So $1 million minus the $80,000 restructure cost gets us a before-tax income from continuing operations of $920,000. It tells us that our tax expense is 40%. So 920 times 0.4 gives us an income tax expense of $368,000. And to get to your final number, which is income from continuing operations, you have to take away your taxes. So $920,000 before tax income minus income taxes of $368,000 leaves us with an income from continuing operations of $552,000. That's our starting point for our income statement. When we prepare an income statement, remember to put your title in there. Your title includes the name of the company, the statement that you're preparing, and the period that you're covering. And the format of the date is different on a balance sheet versus an income statement. So review chapter 3 and 4 to notice that difference. All right, let's go ahead and prepare our income statement. Our starting point per the problem tells us to, under required, prepare the income statement beginning with the income from continuing operations. So let's go ahead and start there. And then we're going to deal with what happens when we disposed of a company. So we have income from continuing operations, and now we're going to separately deal with this discontinued operation. And you could do this in 2 parts, but a format, if you look in your chapter, will tell you that when you're dealing with discontinued operations, you should show income from the discontinued operations on a net basis. So what does that mean? If you read the data that was given in number 1, it tells us that Esquire sold its operating divisions, which qualified as a separate component according to generally accepted accounting principles. The before-tax loss on the disposal was $350,000. The division generated before-tax income from operations from the beginning of the year through the disposal of $500,000. So what is that telling you? It's telling you that if they had continued operations, they would have made income of $500,000. But by disposing of this division, they lost $350,000. Net those 2 numbers together, that's all you're doing. So $500,000 minus $350,000 is going to equal $150,000. And that's the net effect of your discontinued operations. That's before taxes. So now let's tax affect that. We know that our income tax rate is 40%, so 150, or what the cell reference for 150 in this case, times 0.4 is an income tax expense of $60,000. Net the 2. Income before taxes is 150. I'm going to subtract my taxes, and I'm going to show income from discontinued operations of $90,000. Now I'm just going to calculate my net income. I had income from continuing operations of $552,000, and I have income on discontinued operations of $90,000. Those 2 added together get me a net income for this company of $642,000. I'm going to quickly go through and correct my formatting by putting $ signs where I need them. Again, at the beginning of a column of numbers and at the end of a column of numbers, but not necessarily in between. I've already added my formatting for lines. If you don't remember how to do that, come to class with questions or review prior videos. And that's all you need. So again, really quickly, it told you to calculate an income statement starting with continued operations, but it didn't give you continued operations. So the first step was to calculate income from continuing operations. The second step is to deal with the bottom half of your income statement, which is, in this case, dealing with discontinued operations. If you have questions, come prepared to class. Otherwise, send me an email if you need help before we get there on Wednesday. You're going to be left to do a couple of problems in the book. The problems build on the concepts that we covered in these videos, so take a shot at doing them on your own, and we'll review those in class on Wednesday.